Hello everyone, Maurice and welcome to Things to Invest. Talk about investing, finance, and fresh women. For today's favorite times only. The investment I'm going to talk about today would be Ethereum ticket ETH. First, just want to say happy Friday, everybody. We're a great week so far. It's my second video that I'm posting again today. In respect to Ethereum, some recordings up 2:24 p.m. on the Eastern time. Currently trade like $2,911, up about 5.0% so far. In respect to the surge that we're experiencing right now, is mainly driven by a couple of things, right? With respect to the option expiry that's occurring today, also with respect to the job report that came out today, despite it being positive, but with the foreshadow of the inflationary pressure, with respect to quantitative tightening, that will be foreseeable in the near future. It seems like investor sentiment is leaning more towards the negative onto the equity side. So a lot of tech stocks have been selling off today. And then also on top of the Bitcoin, it's up about 6.26%. So there is some drag effect that's going on right now. On top of the low volume that we're kind of experiencing today on Ethereum and with Bitcoin, mainly driven by a lot of institutional investors that are buying in today, right? On top of the fact we are stirring basically a fried rice of a mixture of ingredients right now that with respect to the media affectation front, there are a lot of positive news that's percolating today, right? Some are regurgitating, reinforcing. Just to keep tabs on the respective articles that's been coming out in the last 5 hours so far, knowing the fact that we kind of in the midpoint of our day today, basically 2 hours before the market closes. So with respect to some of the news, I would say collectively, a lot has been coming out from like Decrypt, Bazinga, Bitcoinist. I would say Decrypt is definitely being a little bit more aggressive, which is something that a behavior that we've been detecting so far. So 30 minutes ago, there's an article coming from Decrypt talking about Ethereum NFTs, which is has been very popularized among the artistic community recently. A lot of people have been making a fortune with these NFT investments. And this article is basically talking about how Ethereum 2.0 is basically going to transition or transform the transactional dynamics between the basic or the antiquated Ethereum to Ethereum 2.0 going forward, right? So obviously talk about the value proposition, but in a more of a pseudo way, right? And then there's some other article comes out from Bazinga talking about the Ethereum and Bitcoin related stocks. Why is it surging today? Obviously because of the fact that we are driven by the surge of the asset prices going up today, right? Bitcoin up about 6.33%, Ethereum up about 5.42% so far. And then another news comes out from Bitcoiners, talks about the Ethereum price related to London fork, right? What does it mean, and as it goes live, how would this transform? What does EIP 1559 means? So basically describing, talking about the value proposition and what is this means definitionally, and what is this will subsequently change the infrastructure and the long-term value proposition of Ethereum going forward, right? So I would say this article is actually worth a read if you want to take a look on Bitcoinlist. It came out an hour ago. And then another one coming from Decrypt, and this is another persuasive article. Ethereum co-creator, confidence about the next step after the London hard fork. So this is talking about, obviously, again, a regurgitation of the London hard fork again on the value proposition of this 2.0. How will this be translated into, the future growth and the future adoptions on both the user experience perspective, the gas fee perspective, and also with respect to the efficiencies side of the world as well, right? So another positive news, obviously percolating the price point for Ethereum to go up from here, right? Another one is coming out from Bitcoiners again. So talk about Eden Network launches priority block space rental protocol on Ethereum. So another corporate adoptions for Ethereum again. And then on CoinDesk talks about Binance Smart Chain beats Ethereum by some metrics. So this is another juxtaposition comparing the two assets. And then another one is coming from CNN, talk about Ethan Allen changing the stock symbol, which we picked up that like about what, I think 48 hours ago. We already know that Ethan Allen's changing the stock symbol to basically avoid confusions, right? And then another one is talking about just a regurgitation on the job report, which we saw today, is a relatively gradual, moderate slash positive report that came out today, but obviously with the inflationary sentiment around investors and on Wall Street, obviously is subsequently pushed the equity down, but also at the same time anti-correlates on the crypto side of the world, which is the reason why another catalyst of driving this, right? So what are the key cows that we have counted so far, right? And again, I have no bias. I'm just basically reading the charts and like keeping tracks of like what's percolating today. So we know the option expiry. We know that there's a lot of positive media affectation. We know that the job report came out moderate slash positive, but with the inflationary caveat. We know that there's a low volume today on the purchasings of crypto assets while at the same time still surging, and the activity looks relatively interesting with large green candle being in play. So there's some institutional investors buying, but also at the same time FOMO effect, right? So we got to encapsulate all of this by doing a technical analysis to see how we're trending right now. Are we still running hot or are we cooling off soon? Like, how should we be thinking about in a risk mitigation perspective? Ultimately, we are not wizards. We are in the business of risk mitigation, which I keep enforcing, right? I don't talk about anything with emotions, and I don't ever talk about if they're with any bias, because frankly, this is just plain simple quantitative stuff, right? This is just plain black and white numbers. So we gotta go through that methodology. So stay tuned, stick around, let's make some money. The technical analysis for Ethereum ticker ETH on recordings of 2:34 p.m. on Eastern time. Currently trading $2,915, up about 5.55% so far. You can see that across the whole crypto market, we're up today. So not just for Ethereum. So we do have some drag effect that's currently being pulled from Bitcoin, while respectively Dogecoin and Cardano are also being dragged up as well, despite minimal media affectation front on those respective crypto assets. But Ethereum, we saw, just based on my verbiage that I discussed in the video earlier, there's a lot of percolations on media articles specifically on pushing Ethereum today, right? Despite the low volume and at the same time of the option expiry that we're experiencing today, a lot of being in the mixtures of this fried rice or the soup or the stew that we're trying to make here today, right? So ultimately, we're in a business of risk mitigations. What is the risk profile looks like right now? So take a look at MACD. Again, we are basically stretching up right now. So we are forming some sort of an outlier coming. We are running extremely hot at the 180 level. On top of the fact that we are above the golden line here, which means that we're screaming overbought at the level, which makes sense, right? The corporations have bought in a lot, right? This is not mainly driven by public investors. This is mainly driven by institutional investors, right? Because institutional investors look some sort of like a smaller candles, right? These large candles are, and especially with the small time durations of frames, it means that an institutions or a big whale have dumped a lot of money at once into pushing it up, right? Obviously, with the London Hard Fork being one of the caveat, and also with respect to option expires is also in play, so we do have kind of a convoluted mixtures of the dynamics in play. So the next level of resistance that we should be ideally testing would be, we hope that we'll get above the 2,950, which I believe we almost got to today. But again, that's a flat number based on historicals, right? But again, that's not a substantive level, right? The true level that we should be getting next to as a non-substantive level will be 3,000, but the real level is 3,150, right? So ideally, knowing the fact that we are forming a new platform at 2,750, which is the next comfort zone that we have had before, despite leaping up right now, right? Would I be advising people buying now, right? If I was, if I'm looking at the chart right now and the chart is basically screaming high risk, with low reward perspective going forward in the near term, especially knowing the fact that again we have run really hot for the last 15 days so far, that in a normal course of cadence, it could be a stock, it could be cryptocurrencies, right? It needs to go through a normal course of oscillations, right? That's just a matter of facts, right? Again, I don't have any bias towards do I want Ethereum to go down. I mean, I do want to buy at a lower price point, and the chart is speaking for itself. But again, I don't really have any emotions in play, right? If the RSI was really depleted at the moment, and despite we trading at the $2,914, of course I would be buying it right now. But the chart is telling us that psychologically, people have been buying it, overbuying it, right? So let this sink in, right? We know that people have been overbuying it across the spectrum, globally, in the supply and demand dynamics, right? So buying it right now when everybody has bought in, the price is in a relatively premium at the moment, right? You basically want to buy when people are screaming no, don't buy, right? You want to do it on the opposite side when all the news are screaming don't buy, don't buy. you internally have to logically correct yourself by thinking that, the news are basically manipulations, right? There's some substantive factors in it, but you need to adjust that and really filter through the truth behind the truth, behind what they tell you that they characterize as truth, right? But again, media application have an incentive behind why they're doing what they're doing, right? So something to be mindful of, right? Ideally, in a risk-averse perspective, is to go down to 2,750, right? Cool down a little bit, knowing the rocket has been blowing up right now. That ideally go down to 750, and ideally going back down to 2,450, because it needs to happen. The last thing I want people to do is to chase the pump so much that, yes, you could be high, but you will incur that greed internally. That by the time your greed runs out and you relax, right? And then you lose money because the whale decide to dump a huge account. And just think back in your history, right? Last time when you bought something based on FOMO or emotions, it always worked out that way, right? So, and there's a reason why that is the case, right? Because emotions is not a logical play. We have to use right methodology. We have to apply logics. And when the chart is telling you so, despite running up so hot right now, it might be great, right? You could potentially invest right now, and you don't have to listen to me at all. But listen to the technical analysis, because I again have no emotions in play, right? This is just what the chart tells me. Again, if the RSI was way below, the MACD was about to cross up, which I told everybody that you should buy 1750. It would have been an opportune time, which I did, right? I bought at the 1750, and I know a lot of people did. So congratulations to all of us, right? But right now we are on the opposite side of the coin, based on what the chart is telling me, right? But again, to each his own. Your risk appetite is up to your decision. It's not up to anybody's decision. You are investing. Investing is never 100%. That's just a matter of facts. Like gambling is never 100%, but we are investing because investing is a method to it. There's a logic behind it, right? Gambling has no logic behind it. Is unless you talk about like counting cards in a casino, which there's some methodology behind it, but but I think investing is a little bit more tangible, right? Gambling is just more about cheating the game, So I think investing is a very interesting hobby if you're someone that's intellectually curious, you love to learn, and you love to understand psychology, how to encapsulate between quantitative and qualitatives. And for those that understand and can filter through the emotions by blocking it out in your head mentally and specifically, you will do extremely well. And I'm happy that we are all searching up, and I'm happy for those actually bought at those lower levels that we are, at a relatively rewarded level. All right, just to recap on numbers and technical analysis again, right? With respect to the current level, we are running hot between basically 2,750 and the 3,150. Obviously, you have to go through the non-substantive consolidation level, which are just flat numbers, right? So it's good that we are forming a new platform. We're building more ground onto the new comfort zone, right, which is 2,750. But knowing the fact that we've run up for about 2 weeks now, logically speaking, right, it should go down a little bit more to 2,450 because we have run extremely hot for 15 days right now, right? Despite the corporate adoption, despite obviously, the London fork debut. So volatility should be coming based on the logics behind it, right? Again, I'm just speaking on the chart, so I don't really have any bias, right? Would I be buying at the 2,750? I don't think so because, again, I would ideally like to buy at a discount, right? And it's a good feeling to have to know that, oh man, I wish I bought more. Oh man, I missed out, because it's always better to be safe than sorry, right? I'm never gonna be hyping or pumping or try to, change the course of influence by, misleading people or misinforming people. I'm just speaking on the chart because it's my responsibility to speak what I see in the chart without any feelings, right? Without any bias, because that will be irresponsible for me. You know what I'm trying to say? So hopefully this is helpful. Again, this is for educational. This is more for a YouTube video, right? You should not listen to anybody just based on what you think they said is right. You have to filter out what that person says. Is that person being truthful? Is that person is his analysis sound, right? Don't even believe me, right? Believe in your methodology, believe in your quantitative analysis, right? Ultimately, it's your investments, not my investment. Unless you are giving me your money to invest, right? But that's not the case here, right? I'm just purely giving my thought based on what I see in front of me, right? My job is to do risk management, right? I want to protect you from losing money, right? So hopefully this is helpful. But long-term wise, based on the quantitative analysis, 20% corporate adoption, 9,800, 3.6 times your money if you buy at the 2,750. All right, so that's it for there. Respect my technical analysis on Ethereum again. I know that it can be emotional, and I do understand why some people feel a certain way when the logic doesn't make sense to what the technical analysis says, right? But ultimately, we are in the business of risk mitigation, right? Um, and I hope that we can filter out the emotions and block out the sounds, the noise that's around us. I'm talking about the media applications and apply the logics and execute at the right level that you feel is the right risk appetite for yourself, right? I am just someone that's speaking based on what I see in front of me, and I have no rights to influence people based on how I feel. Again, feeling is not a investment trait, right? That's not the right logic. It doesn't make sense, right? I want to be buying because I want to be buying, or I feel like it's good. What does that mean exactly? I fear of missing out. What does that exactly mean? Right? If you explain, can you explain that like quantitatively? If you can explain that quantitatively, then you should invest at the level that you ideally want to be. But again, the technical analysis is what's telling the truth, and I know based on historical experience, the technicals never lies. Again, people lie because they have their own incentives behind it. So hopefully this is helpful, and stay tuned for this. Take care. Bye.